everyone, Maurice, and welcome to Things Invest, top about investing, finance, pressure development. For today's video, it's Tim's only. The investment I'm going to talk about today will be Ethereum ticker ETH. First, I just want to say good morning to everybody, good evening, or good afternoon, depending on where you are, and also happy Monday to everybody. With respect to Ethereum, as I'm recording on 9:08 a.m. on the Eastern Time, currently trading at the $18-17 level, down about 3.6%. With respect to the foreshadow expectations of the Janet Yellen meeting that she's going to be having with all the financial regulator to discuss stablecoin, or a euphemism for restrictions or some regulatory tightening towards cryptocurrencies. So obviously with the media affectation that's percolating, and obviously with respect to the investment sentiments around, the potential restrictions, and also the inflationary pressures on top of the equity market on how that anti-correlates. The fact that on Friday, the equity side was a relatively green day because of the June retail sales beat Wall Street expectations by a relatively good amount, right? Which subsequently have some anti-correlation pressure on top of the weekend affectation, right? So obviously today's is gonna be more of a fear mongering type of affectation to the market dynamics, which is the reason why it's driving this sell-off, right? Whenever there's any enforcements or regulatory tightening, rather it's a equity or rather it's a cryptocurrencies, it obviously will have some fear that stirs into the equation that subsequently drives some sell-off. So I'm gonna go through a technical analysis to see how we could risk mitigate going forward, because we are in the business of risk mitigating. We are not chasing the market. We are not timing the market. We are looking at the charts and maneuver through the resistance levels to further dollar cost average. And today is one of those, macro driven events that you just have to be able to maneuver through. Obviously, it's a negative one, but it's fine if you are understanding the long term value proposition. So stay tuned, stick around, let's make some money. Alright, so moving on to the technical analysis for Ethereum ticker ETH, I'm recording of 9:19 a.m. on the Eastern Time, currently trading at like the $18-26 level, down about 3.15%. And with respect to the most pressing issue that we're currently facing right now with respect to the Janet Yellen meeting, I did a little bit digging earlier this morning as I was reading through the news. There doesn't seem to be a specific agenda or like a timing or a live stream for the meeting today. It seems like it's going to be a closed door type of dispute or discussions among all the financial regulators on stablecoin or financial restrictions on cryptocurrencies today. So I think what I foresee is going to be happening would be some sort of like a press release afterwards on giving us like a high level synopsis, or Janet Yellen might even potentially have an exclusive with one of the news publication companies on speaking about some of the summary points or conclusion of the meeting and what's the next step for it, right? Because they do own us some explanation with respect to this affectation going on, right? So something we need to watch out for as we hear more, but obviously right now we haven't heard anything yet. I don't think the meeting has started yet per me just like reading through the web so far. It's probably going on right now, probably the first thing in the morning, but we don't know. We don't have any confirmation on the timing yet, right? So something to watch out for. This could be another macro catalyst as we hear a news release coming out. But I foresee it's going to be some sort of like a foreshadow, gradual type of progression going forward. I don't think it's going to be anything confirmatory or a very sudden type of affectation to the market dynamics, because it's something that is gradual, especially on the fact that cryptocurrency or crypto assets is something that is progressive going forward. It's not something that is done and completely finished. So for you to be thinking in that perspective wouldn't logically make sense in my perspective, right? So I think what we're seeing right now across the whole crypto market is really just the fear mongering, right? And with the anti-correlation effect, with being on red on the SPY and Nasdaq, it's really because of the pump that we had on Friday because of the the Wall Street beat expectations, right, on the sales of June that subsequently drive up some pressure. But obviously today, it anti-correlates with the crypto market, which subsequently kind of propel up to sustain above that $1,800 mark, right? So when I see the price going forward, knowing the fact that we do have several different macro drivers going forward, on the 21st, we have obviously the B Word Summit that we'll be hearing, and also with respect to the FOMC meeting we'll be hearing on the 28th, and then the London Fork on August 4th, right? So how do we risk mitigate going forward, right? So knowing the fact that we did breach the 1850, which is a level that we identify the green level, right? We have a relatively large propensity to leap down to the next level, right? We do have obviously the 1800, which I believe we tested today, with $1804 level. And again, this is not a substantive level. This is just a psychological flat number that people typically buy at. So that's why 1800 was the number of a rebound subsequently. However, I do see a little bit more selling pressure because of the fact that, as the day percolates going forward, as we anticipate more of the release of the press release for the meeting going forward, we might see more fear among investors, especially when the people on the West Coast starts to wake up, and especially when the international news start to get picked up as well, that people on the other side of the world start to hear more about these regulations, restrictions, type of affectation from the media front. We might potentially go down to the 1750, which is the next level of comfort zone that we've tested prior. And the 1750 is a very consolidated level. We've tested this once, right? Twice, 3 times. And if you keep going back a bunch of times here before this whole pump up to the 4,000, right? You see a bunch of times like the raise basically from March 07 all the way to March 31st. So basically a 1 month duration, and then combined with like every single time, when you fall off really, really hard, you always come back up really, really fast, right? So the 1750 is a relatively good level to dollar cost average. It's just the ideal level to dollar cost average, but obviously if you break the 1750, that would be on the 1700, which is the 1697.46 that we have tested before, right? A good sign is that we shouldn't see anything below the 1700, to be honest with you, because of the fact that RSI is very depleted right now. We are leaning more toward the oversold level, and especially on the fact that tomorrow I do see some sort of rebound ahead of the B word summit. So today would be the dip. So I'm actually think about buying today, and I think ideally I'll put probably an order at somewhere around like below 1800, right, or 1750 if you want to be super precise. And I think we have a high propensity to get there throughout the day, especially if the meeting is going to happen at like 3 p.m. on the Eastern time or like afternoon. The fear is going to definitely drag out a little bit more. As we, it's going to be like depending on the timing as well, right? Because psychological, expansions with respect to like people, just have that following type of mindset. Like, oh, one person sells, they're like, oh no, everybody start to sell, in a kind of a domino effects type of spectrum. And then they realize, oh, the press release comes out. It's not that pessimistic like they were thinking. It's actually just an areas for, to look at that is more of a foreshadow type of affectation rather than anything sudden. Then it will subsequently rebound, especially for tomorrow. It's going to be, I believe it's going to be a relatively green day for the crypto side. It makes sense because ahead of the B word summit, and then we might sell off from there. And then, as we hit the 22nd, we might see a pump again because 21st I do see kind of a dip because of the B word summit expectations. But ultimately it depends on the verbiage that we hear from Jack Dorsey's and all the other crypto titans, right? So definitely gonna be a volatile couple of days coming up, right? So today is a dip, right? I foresee tomorrow is gonna be a green day. And then the 21st is going to be potentially a red day. I think I'm leaning more towards like a 65% likelihood it's going to be a red day. And then the 22nd is going to be a green day. And then the 23rd, 24th obviously is a weekend affectation, contingent on no black swan news. And then it's going to be the FOMC meeting on hearing on the inflationary pressure going forward and the quantitative tightening plan going forward. So if we hear anything negative around, quantitative tightening or plans around tapering, we will see both sell-offs on crypto and equity side of the house, and then we should be and that should be completely depleted by then, and I think the bottom would be like 1700, and then we should be rallying all the way up back to up until the London Fork debut on August 4th. So I think that's the play is going to be going forward. Again, the frame is identified here, right? 1700 would be the bottom. 1750 would be a substantive level to dollar cost average. We did break the 1819 right now, so there's a likelihood of actually going back down despite, we're kind of hovering right now. So we're kind of levitating without any substance at the moment. So something to watch out for, something to be mindful of. Do we see anything below that? I think that would be very unlikely because we are very depleted right now. So if we did, we would just require a lot of people to sell on losses. But when you do that, that's basically just fear. And fear and being scared of something that is tangible is never really logical, right? So you think about that psychologically. So something to watch out for. There's nothing to be scared about. This is supposed to happen. And that's the mindset you want to adopt when you are calculating your executions for going forward. All right, so just to recap on numbers in the technical analysis, the 1850 would be a substantive level for us to dollar cost average, but knowing the fact that we are hovering between those levels, I think the next level that you might want to put an order in maybe 1800. I think we have a high propensity to maybe hit 1750 depending on the durations of the timing that we have to wait until the press release to come out, or if there's any live stream that's coming out, or they might do a broadcast on TV, something like that, and we hear more, any verbiage or any adjective that lean more towards like any foreshadow type of affectations, or anything that's leaning more towards optimistic side of the world, on collaboration, on partnership, or areas of improvement, like any words like that, we should be, psychologically can soothe some type of or mitigate some sort of like fear mongering, if you may, right? So 1750 would be ideal to level to dollar cost average at, especially for the summit that's coming up on Wednesday. So we should see some percolations of, the anticipatory pressure that's coming up, ahead of the summit, and then especially the London Fork, specifically 2 weeks out, right? So that's something that is going to be a relatively large catalyst in the market perspective, right? In respect to corporate option, 20%, 9,800, 5.3 times your money if you buy at the $1,850 level. All right, so that's it for today. Respect my technical analysis on Ethereum ticket ETH. Hopefully this is helpful into giving you that sense of clarity. Obviously give you that sense of security at the same time, that this is logically supposed to happen, and this is how you are able to basically maneuver through the market cycles, and especially these volatility that will be enduring for the next 2.5 weeks coming up, right? So definitely need a strong stomach for it because of the price fluctuations. But with the chart of the resistance levels, we are able to identify the levels to maneuver and be very calculated, so you're not gambling or like throwing money into a black hole either, right? So hopefully this is helpful. And if you have any questions, feel free to reach out to me, and stay tuned for the next one coming up. Take care.